This is the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping this show on March the 7th, 2014. Our time is 8:43 in the morning, Mountain. Don't forget, our show runs on your favorite radio stations as well. The shows are archived on Harold's websites, HESradio.com and rarecoloreddiamonds.com. You can stream them there. We have a podcast for your portable device. We go anywhere you do with this radio show. Have iTunes on your portable device. Type in World Financial Report on Radio. You can find the podcast. You can subscribe to it, listen to it anytime you want on your portable device. Should remind you, Harold does daily market commentary on his two websites, and the commentary, you can find it on the podcast site as well. A very busy week. The crisis in the Ukraine continued. It was tamped down a bit by Putin coming out and saying, right now, no military action. Although there was huge concern when a part of the Ukraine, the Crimea, voted to join Russia. Also, the Bitcoin situation continued with more exchanges going bankrupt. There were even suicides. And supposedly the person who started Bitcoin was outed, although he's saying, it's not me. It's just a very chaotic situation. Jobs numbers out in the United States, and it's a complete joke. They said they were going to gain about 150,000 jobs, which is basically having the bar so low. If you make anything above that, it's embarrassing to cheerlead it, but they are. They gained 175,000 jobs. The unemployment rate went to 6.7%. In Canada, we lost 7,000 jobs, unemployment rate at 7%. And we had talked about this on a past show. China has $1.8 trillion in trust products, and a large portion of those could default this year. More than 43% of these trusts come due in 2014, and 80% mature over the next 2 years. And they're very concerned about this $1.8 trillion trust market. We had our first default today as we tape our show. Shanghai Chitori, and this is a solar trust, the first Chinese onshore bond default. The Chinese government allowed them to default. They could not pay the interest on their bonds. We'll keep an eye on that story. And one of the main themes from this week, whether it's the Ukraine, the Crimea, Bitcoin, the Shanghai default, hard assets in your portfolio, a must during the times that we live in, economically, geopolitically. You need to have gold and silver, platinum, palladium, diamonds in your portfolio. Harold, it's so imperative. Out of the blue, the Ukrainian situation happened, and that's the way things are. That's why you need that insurance policy to protect yourself.
You're 100% right, Randy. That came out of nowhere. The Venezuelan situation came out of nowhere. And that's what we've always said, is that you can wake up one morning and find the price of gold up $200-300 in pandemonium in the markets, because these things just happen out of nowhere. So again, it's certainly something to keep your eye on. When the Russian situation and Ukraine situation first made the newspapers or made the news, the gold went up $30. So the fact is that we're going to see what happens next week, but all in all, it just doesn't look good. So all in all, the markets held in very strong this week, with all the news going back and forth with Ukraine and Russia and what's happening in Venezuela, and which has caused oil prices to go higher. So basically, we hit very close to we did hit 1352 in gold, actually, as the high of the market today. As we're taping the show, we're down $16 at 1335. But the most important thing is we've spent several days above the 13 and a quarter level, which makes the 13 and a quarter level in gold a pretty strong support level for gold. Now, the next minor level of resistance for gold is at 1,400. The major resistance for gold is at 1,650. Now, what in the world could cause gold to go to 1,650 that quickly? The U.S. dollar. The U.S. dollar is now below the 80-cent level. It's at 79.74. It was actually much lower than that this morning. but because of the job numbers, which again I agree with Randy, they're bogus. The dollar is up 8 points, but basically the dollar is going to continue to fall. 78.50 is very heavy support for the U.S. dollar. If we hit 78.50, which is only a penny basically from where we are right now, a penny 20, you're talking that's enough to bring gold up to about the $1,500 level. And if we get down to 72.5 cents, which is the low in the U.S. dollar that we saw in 2011, that would bring gold back up to about $1,900 to $2,000, which is the price that we saw in gold in 2011 when it hit its high. Same scenario for silver. Silver's down this morning about 60 cents at about $21. However, we need to break above a couple very important numbers in silver to see this market go substantially higher. And again, I'm very confident in gold and silver at this time, and I do believe that both of those markets will continue to increase in value and soon are going to take on a life of their own. It would not shock me in any way, and I've seen this in the past, to see gold go up $200 or $300 in a day. So again, when gold bottomed out at 1180, that appears to be the bottom of the gold market at this time. I doubt that we're going to revisit that unless something ridiculous happens in the market. We needed to see gold go from 1180 to 1250, and we saw that. We had two closes in a row above the 1250 level, which was very important, and then you saw gold go to 13.25. That was the next level of resistance in the gold market. We had two closes in a row above 13.25. We did hit 1350. Again, minor resistance at 1350, minor resistance at 1400, and we'll probably hit that sometime next week. And then if the dollar continues to fall, look for us to approach that $1,600 level. The other scenario that is important to watch is what's happening in oil. We're up 80 cents this morning, or we're at 102.36. You've got two major players in the oil market that are both right now at war. One is Russia, the other is Venezuela, two of the biggest oil producers in the world. So oil is going to be volatile over the next few weeks, depending on what's going to happen, between Russia and the Ukraine and what's going to happen in Venezuela. Both are huge producers of oil. And again, what we could see, and what we probably will see, is the United States bringing sanctions, believe it or not, against Russia, and that's going to cause a whole myriad of problems, because I just don't see Putin as the type of guy that backs down from anything, and I really don't think he's got a tremendous amount of respect for Obama. So I think that at this point here, you're going to see some serious situations coming up in the next week or so out of Russia, and I do not see in any way, shape, or form Putin backing down. And if the United States brings sanctions against Russia, watch for some fireworks in the marketplace. Again, we could wake up one morning next week and see gold up $100 in one day. So we don't want to trade these markets. Trading gold and silver is not a smart idea. Gold and silver are a hedge against all these bad things in the market that are about to happen. So if you're in and out of the market, and we wake up and you're out of the market, and one day this week or next week the market rallies very strong and you're not in it, then you're playing catch-up. That's not the way you play this game. The way that you trade or you invest in gold and silver is buy and hold. Buy the physical metal, hold it, and just see what's going to happen over the next few years. We started buying gold, as most people know, back about 13 years ago when gold was at $250, when nobody even thought that gold was a good investment at that point. We rallied it all the way to $1,900, saw it pull back to $1,180. Now we're back up to $1,350, and the market's looking very strong again. Again, there's no doubt that the government still play with the price of gold, but there are shortages in the gold market. There is no doubt about that. Just look at the premium or the spread between the bid and ask in the physical gold market, and that will tell you the whole story. There is no doubt that there is a shortage of gold, and demand for gold is extremely high, and that alone will push the price of gold substantially higher. But add to it the problems in Venezuela and Russia, add to it much higher oil prices, and that brings a whole new equation into the market, which is inflation. And again, I don't think that there's any doubt of anybody in the know that we have to have inflation moving forward. And what we're going to have to see eventually is that as inflation starts to rear its ugly head, and as inflation starts to pick up and the markets respond to it, the markets that will respond most to inflation is gold and silver on the upside, oil on the upside, and the dollar on the downside. And then what we're probably going to see down the road, as prices get extremely high and volatility is back in the market, then it's going to force the Federal Reserve to raise interest rates. And that's where it's going to become catastrophic, because raising interest rates will destroy the stock market and destroy the real estate market, and that's something that the government here in the United States wrestles with. Obviously, their main concern is getting the economy back on track. The economy, unfortunately, is not getting back on track. If you look at the Dow Jones, the stock market, you would think all is well in the United States, but I'm a Canadian living in the United States, and I can assure you that it isn't going well. Sure, it's a lot better than it was in 2008 and 2009 when we went through a destructive market, but all in all, the economy cannot grow in any country unless the middle class is sound, and the middle class in the United States is not sound. They're in heavy debt. They got really killed financially in 2008 and 2009 with real estate and with stocks, and they never ever recovered. The reason we say the job numbers are bogus is because they don't make any sense. Just look at the participation numbers. They're at 61 or 63%. Means that a lot of people have given up looking for jobs. They don't determine how many of those jobs are part-time or lower-paying jobs. All they do is call them jobs to make the numbers look better. But the numbers aren't better. The fact is that a lot of people in the U.S. are not working, and those that are working for less money than they used to make, especially when the markets were strong back in the 90s and in part of the 2000s. So, again, Randy, there's no doubt in my mind that we're going much, much higher in the hard asset market, the gold market, the silver market, the diamond market. Those type of assets are doing tremendously well and will continue to do so. And again, what we need to see moving forward is a couple minor closes above 1350. It's really no big deal. I'd like to see us get over 1400. Again, minor resistance there, and then this market could really take off. And again, watch the value of the U.S. dollar. That's what's really going to push the price of gold and silver substantially higher.
Education is the key in the financial markets that we are in today. There's so much information and disinformation out there. It's important that you educate yourself by listening to our radio show, as well getting our free weekly newsletter. You can get it from Worldwide Precious Metals, the company Harold recommends you use when you go to invest in gold and silver. Their website, and it goes through all the ins and outs of investing in gold and silver, wwpmc.com, wwpmc.com. You can speak with them about investing at 1-866-623-2002. Worldwide, they're a Canadian company, been in business for well over 12 years now. Harold has recommended them since that point in time. They're the experts to trust and work with in this very specialized market. If you want to start your own precious metals investment account, have that insurance policy in your portfolio, speak with them today. They will educate you. They're very, very heavy on education, so you know what's going on at all times. All gold is allocated either wholesale or premium. They're there to help you maximize profit, minimize risk, and you will have instant liquidity in and out of the market with just a phone call. You can buy and sell. 24/7 online access. The metal can be stored on your behalf, insured to the full value of your investment. Ask about domestic or foreign storage and premium storage in specific coin and bar form. Stored metal is outside the banking system, which is so important as we hear more and more, especially in Europe, about future bail-ins after all that money was taken in Cyprus. 47.5% of bank depositors' money absconded with that bail-in. Have your money, have your hard assets out of the banking system. The metal can be delivered to your door, and Worldwide is there to give you access to the physical bullion you need today. wwpmc.com, the website, telephone number 1-866-623-2002. Should remind you, two charts that are a must-get from Worldwide this week. City analyst Tom Fitzpatrick looking for a staggering $570 surge in gold. You heard right, $570 surge in gold. Find out why. Connect with Worldwide. Get that chart in our free weekly newsletter. As well, City analyst Tom Fitzpatrick, a 44% spike in silver is coming. Get that chart as well. Both are must-reads. We also have an interview this week, and it was interesting to hear what he had to say. Eric Sprott from Sprott Asset Management was interviewed by Greg Hunter. He also interviewed John Williams of Shadow Stats, and John Williams said the Russian dollar dump, and they are threatening to dump U.S. dollars if they are sanctioned, could crash the financial system. It could trigger hyperinflation. But Eric Sprott was asked about the war and what it would mean. He says, basically, there's a big opportunity surfacing in precious metals. I've always believed there is more demand for the metals than supply for the last 14 years. I've documented it. I'm suggesting the Western central banks have little gold left. I think the whole decline in the gold price is the liquidation in the ETFs, gold ETFs, to supply some of the shortfall. I think manipulation and relief from the manipulation and the ongoing demand well in excess of supply is going to power gold higher. What is Sprott's forecast for silver? He says, I think it's safe to say every time gold has gone up, silver has gone up some multiple of that, and I wouldn't expect any different going forward. What is Sprott's price forecast for gold and silver? He is actually going on to say that gold will exceed $2,000 an ounce this year, and silver will exceed its previous high of $50 this year. On a linear trend line, gold should be $2,100 right now, and if you throw on another 15%, you're looking at gold at about $2,400 by the end of the year. If you take a look at the gold to silver ratio, even at where we are today, 60 to 1, $2,000 gold gives us $33 silver, a major move. 50 to 1, the gold to silver ratio, $40, 40 to 1, $50, 30 to 1, 66, 67, 20 to 1, $100, and 15 to 1, where a lot of people believe it should ultimately get to $133.33. We can't urge you enough, though, to get the charts from City analyst Tom Fitzpatrick. 44% spike in silver coming, according to Fitzpatrick, a potential $570 move in the gold market. Get those charts from Worldwide, wwpmc.com, and the telephone number 1-866-623-2002. Harold, we are not out of the woods by a long shot. We talked about the shadow banking system in China. We saw the first default here today. The Chinese government bailed out another financial institution a few weeks ago. Obviously, they are standing here now saying, okay, we're not going to bail this institution out. But at some point, if the numbers get large enough, and they're saying 1.8 trillion, the Chinese government is going to have to step in, or they're going to let it go, and we could potentially have another financial crisis on our hands.
You bet, and I believe this next financial crisis is definitely going to start with the banks, because the banks have really never recovered. And let's face it, banks bring in money and loan out money. That's how they make money. And with interest rates at 1% and 2%, they're not making any money. Just look at their stock prices. Sure, they've recovered from 2008 and 9, but again, just look what the government did to help them get through that. We don't know, because the banks aren't transparent in the sense that nobody knows how much debt they still have, especially from the mortgage crisis and everything. A lot of these banks are sitting with assets that are decrepit at this particular point because they've just been sitting there all this time, especially homes that have been foreclosed in the United States. So, again, it's very difficult at times to figure out what is actually happening with the banks, because they don't give you that type of information. But I can assure you it's not good. And the fact is that the banks all around the world are in trouble. We know it. We read the reports, and we see it every single day. We're seeing basic changes in the banks, and things that they used to do, they're not doing anymore, and they just don't care about it. You know, when Cyprus stole everybody's money, they didn't care about it. They waited to see what the repercussions would be, but there weren't any repercussions. Now you've got situations in England, in China, in Russia, here in the United States, and they're all bank related. So I agree with you 100%, Randy, that one of the biggest problems moving forward is what's going to happen in the banking industry. And the other thing, which we bring up every week, is the derivatives market in the $50 trillion range. And that is the number one area that I truly believe will bring down the markets eventually, is the derivatives market.
And it was interesting. We talked about it a few weeks ago on our show, and there was a follow-up story. We have it in our newsletter. Bail-in replacing bail-out. In a press release dated February the 19th, addressing the so-called single resolution mechanism to be decided by the European institutions, the Council of the European Union stated in what is perceived as a negotiation declaration towards the European Parliament that there was an agreement between the partners that bail-in and not bail-out is the main guiding principle for bank resolution. Read that story. It's going to educate you as to why you need to have some of your money out of the banking system in hard assets. Depositors lost 47.5% of their money in Cyprus. And remember, originally it was going to be 25%. Then it was going to be 30%, and then we heard maybe 40%, and then suddenly at the end it was 47.5%, and they were given worthless shares in a bank. And this is one of the reasons why Worldwide is so intent on educating you. They had seminars in Edmonton and Toronto last year about the bail-in, bail-out. Obviously, bail-out meaning that the government would bail out, ultimately the taxpayers in a sense. Bail-in is the actual bondholders, depositors losing their money to save the financial institution. That's why we're advocating hard assets in the times that we live in. Diamonds, portable wealth, gold and silver, portable wealth. Learn more, educate yourself, speak with Worldwide Precious Metals, 1-866-623-2002. Their website is www.pmc.com. www.pmc.com. And I can't urge you enough, get this bailout story as well, the two charts from City analyst Tom Fitzpatrick. 40% spike in silver coming potentially, and $570 in gold. Get those charts from Worldwide. Educate yourself today. They have an outstanding website. The website is www.pmc.com. The telephone number to connect with them, 1-866-623-2002. We are going to come back and talk about diamonds. It was an interesting week in diamonds, and Harold has some exciting news because hsfineauctions.com is having another auction on March 26th, 8 Eastern, 6 Mountain. The Learning Center at rarecoloreddiamonds.com is up and running. We'll talk about that. And some interesting stats on deflawless diamonds and colored diamonds. We'll talk about that too, as the World Financial Report on Radio with Harold Siegel and me, Randy Marshall, continues right after this. Welcome back to the World Financial Report on Radio with Harold Siegel. My name is Randy Marshall. Joining us via the telephone, our financial and diamond expert, Harold Siegel. We're taping the show on March the 7th, 2014. Our time is 9:08 in the morning Mountain. Radio show runs on your favorite radio stations. Also, the shows are archived at Harold's websites, hesradio.com and rarecoloreddiamonds.com. The show is portable. We are on your portable device via iTunes. Type in World Financial Report on Radio in iTunes. Subscribe to the podcast, and we can go anywhere you go. Should remind you, Harold does daily market commentary on his websites, and you can find it on the podcast site as well. As we started today's show, we talked about the situation in the Ukraine and the Crimea, the Bitcoin situation, poor jobs numbers out of the United States and Canada. There was a solar trust that defaulted on bonds in China, and that's why we're saying have an allocation of hard assets in your portfolio at all times as, and this is so important, an insurance policy. Educate yourself about having gold and silver. Harold recommends you speak with Worldwide Precious Metals. Their website, www.pmc.com. The telephone number, 1-866-623-2002. Harold's website for diamonds is rarecoloreddiamonds.com. And our special diamond for the week, the featured diamond, is a 0.32 carat radiant cut, fancy, intense, orangey pink argyle. I love the cut of the diamond, and the color of it is absolutely beautiful. And one thing, if you have not had a chance to see, Harold was on Bloomberg twice last year. Once with Carol Masser and another time with Deirdre Bolton, who has moved on to Fox Business News. We have those interviews in our newsletter. You can watch them. And I would really encourage you to watch them and see exactly the look on those ladies' faces when Harold put around their neck diamonds, jewelry that actually at one time belonged to Liz Taylor, and some of the amazing colored diamonds Harold brought when he was interviewed by Bloomberg. One interesting note, this is an interesting stat. In 2003, and this is a quote from Raul Katica, head of the jewelry department at Christie's Auction House. In 2003, we would sell a 50-carat D Flawless, and Harold brought D Flawlesses to our attention well over a year ago, for $50,000 a carat. And this week, about a year ago, we sold a 26-carat D Flawless for $170,000 a carat. That's 3 times the price. All colored diamonds are making 10 times the prices on 10 years ago, the price that you would receive then. So 10 years ago, 10 times the price for colored diamonds. And Harold, that's why we say this colored diamond market and the D Flawless market is something investors should look at when they're about to start a hard asset portfolio. Must include diamonds. Have diamonds in your portfolio.
You bet, Randy. Those numbers are staggering. To think that in 10 years you triple your money on a hard asset is just unbelievable. And those prices will continue to climb and climb and climb. D Flawless, triple excellent, perfect diamonds are nearly impossible to get. They represent 0.001% of the market. Some of my clients own those diamonds. And again, even diamonds that were purchased last year or the year before have gone up substantially. So they're great investments because they're perfect diamonds. They represent such a small part of the diamond market. And again, these diamonds go up more than almost any other asset. And also, they're absolutely stunning. They're beautiful diamonds. They're perfect in every way. And it's also true that the price of colored diamonds are outpacing those diamonds. They're doing tremendously well. Argyle pinks especially are just skyrocketing in price. And they do that normally because there's only very few of them available. However, the mine is going to close soon. It's going to close by 2020, which is 6 years from now. And if you think that these diamonds went up, tremendous amount over the last 10 years, wait and see what happens the next 6 or 7 years. The closer we get to this mine closing down, the price of these diamonds will just take on a life of their own, and we'll see increases in these diamonds like you've never, ever seen before. So again, this is an opportunity in pink diamonds that you will never, ever get again, because once this mine closes, there will only be a very, very small amount of diamonds. Now, I also own some vivid pink diamonds that are non-Argyles, but the colors are just ridiculous, just absolutely stunning. Really deep, beautifully, highly saturated, vivid pink diamonds. And when you really think about it, the Argyle produces 95% of the world's pinks. Very few of them are vivid, but vivid pink diamonds that are coming from the remaining 5% are also extremely valuable. I've gone over my inventory, and I do own some of these diamonds, and they've gone up tremendously in value. In fact, last year, there was a 0.5 carat vivid pink diamond that was a non-Argyle, and I believe it sold, if I'm correct, Randy, for over $500,000.
That's right.
So, I did go into my inventory, and I do have some new vivid pink diamonds coming out, both Argyles and non-Argyles. And wait till you see these diamonds. They will be up this weekend. So we've just done a tremendous amount of work on our websites, and we're getting ready for another auction, which is coming up on March the 26th. And we will be auctioning off some of the rarest Argyle diamonds ever. These diamonds you've never seen before, and most people, even in the industry, have never seen before. And these are from, my private collection, and these are colors that you would never think would come out of Argyle. The thing about the Argyle mine is that what turns a diamond blue in most cases is boron, but there is no boron at the Argyle mine. But there's still blue diamonds that are coming out of there. I'm going to show diamonds on this next auction that are so ridiculously rare that we'll probably never, ever see anything like this again. Intense orange yellows, violet colors, the most beautiful diamonds, and they're all inscribed by Argyle. So this is going to be one of the most important auctions that we've ever had. The fact is that we're starting to put these up on the catalog now. In fact, up right now, as we're speaking, is the coins that we are going to auction off, and then later on today, the diamonds are going to be up, and you're definitely going to want to see these. But we have a tremendous auction coming up. The first item coming up for bid is the Natura Proof set. This is from my private collection. It absolutely broke my heart to put this up, but again, it's imperative that we build this auction business and get it to where it needs to be, so in 8-10 years from now when we start selling our diamonds, we have this phenomenal business with clients all over the world. So this is the wild cats of Africa, the cheetah, and these are 24-karat gold coins that will take your breath away. The most beautiful gold coin set you could ever possibly imagine. Estimated values is in the 3,500 range, but at auction they've been selling for more than that. We've got the half-ounce koala, Australian koala 2003 proof coin, a half-an-ounce platinum, but I'm also putting up the Australian koala 2003 proof issue 2-ounce platinum coin. Intrinsic value alone, that coin's worth over $3,000 just in intrinsic value, but there's none of these available. We're also putting up the Finland Euro triple coin set, which is unbelievable. You will not believe the amount of Euro coins in this particular collector set, and with what's happening with the Euro, that it may not be here in 2 or 3 years from now, this would be an excellent set to own because it's not overly expensive at this point. The starting price is going to be $250. However, 3, 4, 5, 10 years from now, this thing could go up 10 times in value from what it is right now. Then I'm bringing on a silver kilo Aztec coin. It's magnificent. Very, very, very few of these exist. It's 0.999 silver. It's a proof coin. It weighs 2.2 pounds or 1 kilo, and the actual display case is absolutely ridiculous. It's one of the most beautiful coins I've ever owned, and I'm putting it up for auction because this is a very, very important auction coming up on the 26th. And then, from my private collection, you'll never see these. This is the Vatican set. This was part of the set that Pope John Paul II was buried with. And what I had to do to get these sets, I literally had to take a gigantic risk. I had to bank wire funds to Vatican City. Luckily, I found some people that were very honorable, and they stood in line for 2 days to get me these sets. I paid them handsomely for it because these are now literally impossible to get, and I've got the entire set that was actually put in the coffin when Pope John Paul II was buried, and this is one of the sets that was in there. So it's absolutely amazing. It's one of the most beautiful sets, and in the middle is a beautiful silver medallion depicting the birth of Jesus Christ. So it's a very, very important set. Then the diamonds that we're putting up are absolutely the most amazing that we've ever auctioned off. These are so rare, some of these diamonds, that you'll never ever see anything like them coming out of the mine before. We were just very, very fortunate to get them. So on March the 26th, make certain you sign up for this because this is one of the most important auctions that we've had, and we will have some very, very important people watching this particular auction as we are getting involved with some very important charities moving forward. And again, this is only going to enhance our business. The other thing that you should be aware of when you go onto rarecoloreddiamonds.com, we've been working on this for a long time now, but we have now completed pretty well our learning center. So if you go to rarecoloreddiamonds.com, my main website, first of all, you'll see that we are advertising our upcoming seminar on the 26th. If you go to the Investing in Diamonds section, you're going to see our investment section, but then you're going to see a small video for a couple minutes, and then you'll be able to sign up and get into our learning center, and you are just going to be amazed at the tremendous amount of information that is in this learning center. And what you're going to be able to do within the very near future, we're just finishing off the actual course, but you're going to be able to take a course with us on diamonds. You're going to be able to go through the learning center. You're going to be able to read and learn everything about diamonds. And when I say everything about diamonds, it's absolutely phenomenal what we have in there, because it goes from what diamonds are to how they are cut, how they're polished, how they're mined, how to read a GIA report. It's spectacular. I've never been more proud than what's happening with our business at this particular point. We're at a totally different level than we were a year or two ago. So again, I always felt that an informed and educated client is the best type of client, and that's why we've invested so much in our learning center. Very soon, within the next week or so, you'll be able to take a course with us online and actually get a diploma. And again, you're going to learn everything you need to know about the diamond market that will help you make an informed and intelligent decision. So we've got the seminar coming up on the 26th. We've got the learning center. The auction coming up on the 26th, the learning center that you can actually go to this weekend and start to read and learn about diamonds. You're going to absolutely love what we did. Meanwhile, the diamond market is on fire. As much uncertainty as there is in the world today, the diamond market is one safe area to put your money. Because the fact is that what's going to happen in the stock markets moving forward, the currency markets moving forward, with what's happening in the oil markets, between Russia being in trouble and Venezuela having their issues, all these are going to point towards higher hard asset markets. And that's where your money should be. If you're in the paper markets, we could wake up one day in the foreseeable near future and find out that the stock market's down 1,000 points, just like we did back in 2008. You don't want to have all your money in the paper asset market, because with all that's been done in the last few years, it's not a safe place to have your money. Meanwhile, to be diversified and have some money in the rare diamond market is a very, very smart thing, because there are certain diamonds that have very strong track records and that have never, ever declined in value because of supply and demand. The yellow flawless market is a good example of that. There's very few high-quality yellow flawless diamonds for sale anywhere in the world. We have the major supply of them because we've invested very heavily in them. Now, these diamonds go up by about 15% a year for the fancy yellows and the fancy intense yellows. The fancy vivids are going up by 20 to 25% a year. And again, these diamonds are in such tight supply that they never decline in value. So here you've got an asset that goes up anywhere from 15 to 40 to 50% a year, depending on how strong the color is. And again, these diamonds never decline in value because there's so few of them. Why in the world would we not want to own an asset like this? In fact, in the report that Randy read earlier in the show, it said that D-flawless whites are increasing 3 times what they were 10 years ago. That's 300% that you could have picked up on a diamond if you invested 10 years ago. And a similar situation in colored diamonds, they've gone up 1,000% in some instances from where they were 10 years ago. Now we've got a situation where the Argyle mine that produces 95% of the world's pink diamond is going to close in 6 years. So it's a longer-term investment. It's like putting your money away for retirement. But if you own an Argyle pink diamond, you could see an asset that could go from $50,000 to $500,000 in the next 10 years. When you talk about putting money away for retirement, and you sit back and you're petrified because you got your money sitting in the stock market, mutual fund market, or RSPs, you know what the situation could be because you lived through it in 2008 and 9. The Dow dropped from 14,000 to 6,500, and almost everybody got wiped out. At the same time, the real estate markets were plummeting, and the currency markets were all over the place, and firms were falling like flies, and banks were going bankrupt almost every day, and that was what happened basically 5 years ago. We're in a very similar situation now. So if you don't learn from history, history is going to repeat itself. And again, if you're in your 50s, 60s, 70s, and you're stuck in that market again and this market plummets, the chances are you'll never, ever make back your money. The smart thing would be to put away some money in some safe assets. But safe assets that can increase in value and give you the return that you're looking at. Again, to own a yellow flawless diamond today for $20,000, in 10 years from now, that diamond's going to be worth about $75,000 to $80,000. So you put away a $20,000 diamond today that's yellow and flawless, that's never ever declined in value, that the supplies are getting tighter and tighter, and just put that away in your safety deposit box and let that diamond climb in value. You have no idea how important that asset is, and we're going to know moving forward with what happens with Russia, Venezuela, and all these other countries that are in big trouble at this point. So again, to put a diamond away that nobody knows about, that's portable private wealth, that never declines in value, and can give you high returns, it's a no-brainer. These are the most amazing assets. Now, why would people not invest in diamonds? Because in a lot of cases, most people can't afford them. The minimum investment is $15,000 to $20,000. If you look at the United States, 75% of the population in the United States lives paycheck to paycheck. So when you're really talking about assets of this caliber, you're talking about the top 1 or 2% of people in the world that can afford these type of diamonds. Even a $20,000 diamond, if you look in the United States, most families don't have $5,000 sitting in the bank, let alone $20,000 to invest on an investment. But again, there's a lot of very, very successful people in this world and a lot of very wealthy people. And again, our clients tend to invest in these type of assets because they're safe and they give you a very high rate of return, and they have more safety than any other asset. So I urge you to, number one, go to hsfineauctions.com or rarecoloreddiamonds.com and sign up for the auction coming up on March the 26th. It's going to be at 8 o'clock Eastern, 6 o'clock Mountain. We will have bidders from all over the world, from China, from Australia, from the United States, from Canada, from Europe, and they'll all be in this auction, especially because some of these Argyle diamonds that are going to be auctioned off will never, ever be seen again. So, again, I'm extremely excited about this auction. Got some beautiful coins, some gorgeous Argyle diamonds coming up, and again, it's going to be one of the best auctions that we've ever had. That's coming up on March the 26th. Also, go to the website this weekend and sign up for the Learning Center, and then learn about diamonds so you can understand why these diamonds do what they do and see if it's the right type of investment for you. Again, these are not for everybody. We know that the price of diamonds are out of some people's price range. But, again, when you look at them dollar per dollar, they return more than almost any other investment. And if you look at the stock market's probably the riskiest place to have your money at this point. So, again, Randy, we're looking great at this time. Got a great auction coming up. We're going to add the rest of the diamonds this weekend. We've got the Learning Center. You can read about that now. You can start to take a course with us within the next 2 to 3 weeks, and I'm really looking forward to that. An educated client will do much, much better in this type of market.
RareColoredDiamonds.com. Our featured diamond of the week is a .32 carat, radiant cut, fancy, intense, orangey pink Argyle. Go to RareColoredDiamonds.com and you can see the diamond. It is in a video there. We have a copy of it, a picture of it, in our newsletter. Get our free weekly newsletter from Harold. Harold will be happy to send it out to you via email, free of charge every week. Listen to the radio show. Get our information. Keep yourself educated. You work hard for the money that you earn every week. Obviously, take a little time every week to educate yourself to profit and protect that money. RareColoredDiamonds.com. The telephone number 1-800-432-1022. hsfineauctions.com is the website. March 26th, 8 Eastern, 6 Mountain. The Learning Center is open at RareColoredDiamonds.com. And obviously, you want to take a look at the catalog for the auction coming up on the 26th. You can do that at hsfineauctions.com. As I mentioned on the last show, and it's worth repeating, in 1960, the Princey pink diamond sold for £46,000, That's $70,725 at Sotheby's in London. The buyer was Van Cleef & Arpels, which threw a party attended by, and this is the Maharani Siti Devi of Baroda and her 14-year-old son, who was nicknamed Princey. The diamond was named after the youth. So in 1960, $70,725. In April of 2013, the Princey sold for $39.3 million at Christie's in New York. And as I was mentioning earlier, in 2003, they would sell a 50-carat D flawless for $50,000 a carat. 1 year ago, they sold a 26-carat D flawless for $170,000 a carat. That's 3 times the price, according to Raul Katika, head of the jewelry department at Christie's. And colored diamonds making 10 times the prices on 10 years ago. Harold, this is why we advocate hard assets in your portfolio. And if you're starting a diamond portfolio, the core holding in a diamond portfolio today, without a doubt, would have to be a pink Argyle diamond. But when we know that mine is shutting down, that would be a core holding a person should start with immediately.
Exactly, Randy. And we have Argyle pinks starting more than likely in the 30 to 40,000 range and moving up from there into the 7 figures. However, these are investment quality diamonds. You don't have to spend $2 or $3 or $5 million, or in the case of the Princey, $47.5 million, to make money in a diamond. In fact, if you look at the auction results for the last few years, it's the medium price diamonds that actually had the biggest return percentage-wise. Diamonds that were $15,000 that were selling for $45,000 and $50,000. Those are the type of returns that we look to get in the market. So again, most of our clients are not buying million-dollar diamonds. Most of our clients are buying diamonds in the 20, 50, 100,000, 200,000 range. And these are assets that, again, are safe. They've never declined in value. They have a track record. They go up. And in the case of the Argyle pinks, there's not going to be any more of them. And if we don't take advantage of the Argyle pink diamonds now, you will never, ever get another chance to do this again. There's no other mine in existence that produces 95% of any diamond. So again, once the Argyle mine closes, this is something that you will regret for the rest of your life if you don't take advantage of it, because again, this will never happen again. There has never been another mine like the Argyle mine that produces 95%. The other 5% of these diamonds are going to become very valuable also, because again, there's not going to be any pink diamonds anyways. So we are adding to our Rare Colored Diamond site, and you should be able to see it this weekend, if not, the latest Monday of next week, our new supply of vivid pink diamonds. Some will be Argyles, and they'll be marked as such, and some will not be. But looking at the prices, there's really not that much difference at this point, because, again, vivids are the best that you can buy. And, again, I'm certainly reminded of last year when there was a half a carat round vivid that was a non-Argyle that sold at auction for $500,000. If that doesn't tell you what's happening in the diamond market, nothing will. And again, we're looking at diamonds that today you could buy for $40,000 or $50,000, and in 10 years from now could be worth $400,000 or $500,000. It happens often in the diamond market, and all we want is for our clients to be involved in this, because again, you've got tremendous safety in the market and you've got appreciation. These diamonds can go up substantially in price, and we also own 8 Seagull Fine Auctions, which will resell your diamonds for you. Nobody else can resell your diamonds. We're the only firm that has the wherewithal to do so, and it's in the form of our auction business, 8 Seagull Fine Auctions. We built it as the only secondary market to resell diamonds. So you can literally, it's virtual. You can literally attend our auctions from anywhere in the world from the comfort of your own home, as long as you have your computer with you. We're going to have people from China, Australia, New Zealand, England, all throughout Europe, Canada, United States at this auction. And now that we're adding to it these extremely rare small Argyle diamonds where the colors are never been seen before, like intense orange yellows and violets and grayish blues and those type of things, you're going to see diamonds like you've never seen before. And this is going to be an outstanding auction. I can't wait for the 26th of March.
Hank, thank you very much, Harold, for another outstanding show and all your knowledge as usual.
It's my pleasure, Randy. I wish everybody a wonderful weekend and a very profitable day.
hsfineauctions.com. Next auction, March 26th, 8 Eastern, 6 Mountain. Go take a look right now at the catalog. rarecoloreddiamonds.com. Take a look at our featured diamond, the Learning Center. Connect with Harold, rarecoloreddiamonds.com, 1-800-432-1022. And Worldwide Precious Metals. Start your own precious metals portfolio today. Speak with Worldwide, wwpmc.com, telephone number 1-866-623-2002. Get those charts from the Citi analyst Tom Fitzpatrick. Gold adding $570 and silver moving up 44%. That's it. Another edition of the World Financial Report on radio with Harold Siegel and me, Randy Marshall. We will talk to you next week.